Here we have the 15-minute price chart for AMC Entertainment Holdings Incorporated, stock ticker AMC. As we can see here, the share price has started to head lower a bit after posting highs, which came in at roughly 536 during the Tuesday, June 2nd trading period. We've got a bit of a double top condition at the moment. That is a bearish structure. And we are starting to roll over here. But what's important to remember is that, we had essentially reached overbought territory as these gains were occurring. These upper highs here. Let's just get an arrow pointing up here. So we were reaching overbought territory in this area. Not totally surprising because the stock has seen a pretty significant move higher here. This is a lot of upside activity without much to be seen in the way of downside corrective retracement type of activity. So things can't just move in one direction forever. If things are moving up at some point, we do have to see a corrective movement to the downside. In order for markets to kind of balance themselves out a bit. And this does appear to be what we're seeing at the moment. So as we can see here, the move to the upside was fairly substantial, and then the move to the downside does look a bit more corrective in nature rather than a true reversal of the prior uptrend. In addition to this, we have to remember the fact that we're coming into a holiday trading period. When this does occur, there's a lot of money that tends to get pulled out of the market. And the overall effect that tends to have is that whatever prior trend was in place, those trends start to kind of slow down and stall out. So in this case, since we're seeing a prior uptrend, the opposite of that would be a reversal period, shorter term reversal period to the downside. So overall, this isn't entirely surprising. Some people might be getting concerned at this point. Nobody wants to see losses of any kind. But, it has to be remembered that there are kind of natural events that have to occur in the market. Things can't just move in one direction. And then, we do have to add to this the fact that we are coming into a holiday trading period. Markets are going to be closed on Thursday. So it becomes more difficult for any stock. This isn't just AMC, but it becomes more difficult for any stock to kind of sustain a strong rally that's being seen. There's really no, in other words, there's really no fuel for the fire. There's nothing to kind of continue the momentum. If large percentages of the market are starting to, close up shop and, remove orders from the market and things like that, you really wouldn't expect to see things much different from here. Overall, what has to be understood here is the broader, upward movement versus the broader downward movement. And as we can see, just in this simple drawing here, the upside has far outweighed the downside. And the quickness of this move lower, it's come pretty quickly because this is just a 15-minute chart. So, we can see that it took a long time for this uptrend to build, and then some of this was given back quite quickly. So this really does look corrective in nature. It does look kind of pre-holiday in nature. So I don't think that this is any cause for major concern yet at this point. We do have to watch for certain breaks of certain levels, though, because if certain levels start to break, then that would be more of a cause for concern. The real area that I'm watching here comes in right here. This would be we can call this roughly the 490 level. It's a bit below there, maybe more like 489. But this is an important level because I've drawn attention to this level previously because this was a double top resistance zone previously, and it was a significant level as we can see here because once this level was finally broken, it did become a forceful break. Like we can see these green arrows, these green candles here are much stronger than most of what is seen on this chart. So once we did see a final break through this area, it was more of a forceful move. So this level does clearly have significance on its own. But then we have to add to this the fact that it is now also coming into contact with the 200 period exponential moving average. That's this blue line here. So, you can kind of see that this white line and this blue line are kind of working sort of in the same price area. So when you see it's called a confluence of indicators. It's really just means a combination of more than one technical signal in one area. So, you've got this confluence of indicators here, which do point to strength as support roughly in this area. So ultimately, when you see all this type of thing, what you would expect to see here would be a bounce. This would be a price bounce. So you would expect to see markets continue to move higher. Really, you should be retesting the prior highs, which would come in, just above 535. And then if that occurs, that would be the third time this level has been tested. So it is possible to get triple top conditions, but the more times you test an area, the less likely it is to hold. If you're testing it many, many times, it's pretty clear that the market is forced on breaking, focused on forcing its way through that level. So overall, it is a picture that starts to suggest more gains rather than more losses. But it is important to watch this area here, because equally, just as possibly, you could see a downside break here. If you do see a downside break here, I would suggest. I would expect to see probably further declines from there, because it would mean that a significant level of support has broken. If that did occur at that point, you would see a break of the 200 period exponential moving average as well. So that would mean that all four of the moving averages have been broken. So that on its own would be a negative signal. Um, and it would suggest that prices are ready to move lower. What I also need to point though here is the indicator reading itself, because during this move lower, we came very close to reaching oversold territory. And that's interesting because it does mean that, markets, even just this small price move here, the indicator reading was already starting to flash this signal like, hey, you've fallen too far here too quickly. It's ready to start correcting back toward the top side. So, and this wasn't even a very significant move. I mean, this was not a major price move lower. I understand some people are probably concerned about this, but it's really important to note that the indicator reading, was almost saying that this was too much to be seen. Like, hold your horses here. You need to stop. We're deviating too far from our average price range. So it's time for things to start reversing back in the other direction, back in the positive direction. So, overall here, there are signals here which suggest that any further losses should be limited. You have to keep in mind the fact that this is a pre-holiday trading period, and there have been a lot of gains here over the last few trading sessions. So we can't just expect things to move in one direction all the time. We do have to expect some corrective moves to the downside at some points as well. So here's the current market analysis for AMC Entertainment Holdings Incorporated, stock ticker AMC.